Well, before joining Witan, I spent 10 years or so in the oil industry and then 20 years as a European strategist and working for a wealth management company. I joined as chief executive in 2010, and my role within the company is twofold. I'm responsible for the day-to-day operational management of the company and with the board for reporting to shareholders, but I'm also responsible for the delivery of investment performance and accountable to the board for that performance. Witan invests its shareholders' funds in global equities, aiming to deliver a total return which is better than global index benchmarks. Where we differ from others is that we operate a multi-manager structure, trying to use different managers to play to their own strengths and also to diversify the variability of performance that you'll always get with having a single manager. Approximately 90% of our assets are managed by external managers. Those managers are chosen by the board after a rigorous selection process, and we aim to choose people that we're happy to stick with through multiple economic cycles. We review them once a year in case anything's changed, and also to keep ourselves current with their thinking. But the main objective we have is to take a long-term view of their ability to deliver value. And then approximately 10 or 12% of the assets are managed by the in-house executive team, looking for special situations in areas such as technology, biotechnology, listed private equity, if we think those are offering exceptional value for investment. Witan's portfolio managers seek to choose companies which in the long term are going to grow better than average within their markets. And companies which grow successfully and are well managed are usually able to grow to pay dividends to shareholders which grow over time. And those dividends are the source of the income stream that we pay out to our shareholders. Witan's board has two major areas of responsibility. The first is, like other listed companies, we're responsible for the overall management and for the governance of the company and for reporting clearly to shareholders. The second is, because we're a multi-manager organisation, changing managers is more frequent, and the board's involvement and expertise in choosing our managers is an integral part of our investment process. Witan's dividend policy is to grow our dividend in real terms year by year. And over the last 5 or 10 years, we have grown our dividend at several times the rate of inflation, and we've grown our dividend now for the last 43 consecutive years. But it's important for shareholders to bear in mind that the ability to grow the dividend depends upon the underlying health of the companies that we invest in and the quality of the decisions that our managers take. So it can't be guaranteed in the future, but we're very focused on maintaining that record. Over the past 10 years, Witan's net asset value total return has been 10 to 12% a year, which is a couple of percent a year ahead of the global equity benchmarks that we've applied. Obviously, no guarantee can be given about future performance because that depends very much on the fortunes of the financial markets and our success or otherwise in navigating the pitfalls and opportunities that those markets throw up. But we are very committed to maintaining that successful record.